We're going to move into our final panel of today, and thankfully the rain has stopped outside too, I think. And I would like to welcome to the stage a very all-star entrepreneur and now angel investor, Fritz Demopoulos. Fritz is the founder of Queen's Road Capital and co-founder of Qunar, China's travel site. And I'd like to welcome Fritz to the stage. Thank you. And I would also like to welcome Richard Chan, managing partner from Iron Fire Angel Fund, to the stage. Richard? Richard has a background from Microsoft. He was previously China Product Planning and Strategy Lead at Microsoft. He's now investing in early stage startups in the China and US technology industry. And this panel, by the way, is our angel investor panel. And so we have a host of angel investors, including Ted Lai, who's a co-founder of AngelVest. And I understand that AngelVest just opened up here in Hong Kong. I know their team in Shanghai, and it's great to see AngelVest taking off here, a group of angel investors investing together as collectively here in Hong Kong. So Ted is representing AngelVest. And also Titus Miglowski, Managing Director of Fresco Capital Advisors. Titus has been very helpful to me in helping to introduce me to so many interesting entrepreneurs and startups here in Hong Kong. So I'd like to thank him for that. Please warm up your questions because we'll leave a little bit more time for Q&A on this last one. Thank you. Fritz, it's a rare opportunity that I have to really sit down and chat with you about your experience as a very successful startup founder from China and now an angel investor. Do you have any advice for those out there in the audience who are, maybe looking to follow in your footsteps?
I guess I could write a book on it.
You could.
Yeah.
I'm sure you would have a lot of publishers lining up.
So I think how to negotiate with VCs. Let's talk about after the conference today, because I think there's a lot of secrets that I could provide everybody. And since I know these VCs, I have to be careful what I say.
Oh, okay.
I think there was a common, I really loved what Yat said, what's your dream?
Yeah.
And I think, I guess this conference today, Silicon Dragon, venture capital, trying to obtain institutional financing. And I think it's very important for entrepreneurs just to think about, you need to be thinking about $1 billion opportunity. And that's one of the challenges in Hong Kong is, does Hong Kong present, except for property and maybe a bit of trading, is there $1 billion opportunity from the Hong Kong consumer market or the Hong Kong enterprise market? Probably not, unfortunately, for a startup small company. So therefore, your dream should be, I believe, in those terms. So what does that mean for a Hong Kong-based entrepreneur? And I'm assuming you're here for lifestyle reasons because you don't want to go to China or something like that. But I mean, I think entrepreneurs need to be thinking about where is that $1 billion opportunity? And if it's in China, great, hopefully, besides your dream, then you have to match your dream with execution capability. And do you have the capability to mobilize resources, talents, to exploit a $1 billion opportunity, whether it's in India, China, or globally? And if you can't make that case, well, maybe that dream is wrong. Or, to be honest, you should really park yourself in Shanghai or even more importantly, Beijing, if in fact that opportunity kind of relates to mainland China. Now, if it relates to a global play, and I think we have to be careful about dreams, right? Always talking about, oh, okay. And it seemed like the message was, well, just think really big. Well, fine, you can think really big, but which is great, and it's nice to have that vision. I'm going to create a company that's going to kill Google. It's like, well, so what, right? I mean, do you have the execution capability? Do you have that edge, that perspective, technology, those competitive advantages to go and do that? If not, well, maybe you need to readjust that dream. But hopefully, that dream is still $1 billion, because if it's not, then you may not be ready for institutional financing. You may have to get, unfortunately, maybe, your relatives and friends to really fund that opportunity. So I think that's one of, many pieces of advice that I think I can give entrepreneurs that I hope kind of touches upon some of the other things we've talked about today.
Do you think that the big, billion-dollar opportunities are still there to be had in China?
I mean, absolutely. Now, the opportunities that were there a few years ago are going to be different than the ones moving forward. And just to give you some perspective, when I moved to China in 1997, it was really funny. Some expats told me, man, you really missed the boat. I'm going, well, what do you mean? Well, you should have come here in 1995. And meaning there's always a good time to set up a company in a large market. Now, that opportunity may change. Is it going to be a consumer internet app play? I really doubt it. Is it going to be social? I really doubt it. So one of the things about entrepreneurship is, and it's so basic, is you have to be doing something no one else is doing. And hopefully, whatever you pick, you have enough runway that kind of before people figure out it's valuable, that they can't catch up. And so, yes, there are those opportunities in China. I think we've talked about some of those, whether it's within the fintech space, maybe some consumer opportunities, clearly many, many enterprise opportunities. And so there's a host of different areas that I think are really fantastic. Just, hopefully you're first, and hopefully you have enough runway, and hopefully it isn't just a simple app which can be, copied by, and unfortunately up in China, copying is, someone mentioned, like, it's a compliment, and to be honest, it's a compliment both ways. And so, so hopefully you are distinguished enough to really sustain that onslaught that will inevitably come.
So you had an option to choose to build your startup anywhere, right? But you chose Beijing. So why did you choose Beijing?
Well, I've lived in mainland China since 1997, and I only recently moved to Hong Kong. And so similar to what I said, me and my co-founders were looking for a big opportunity. Our inspiration was from Google in 2004. The hottest company in the world was Google, and we just figured out, so where does Google make its money? We found out that travel was a big category, and so we said, well, let's see if we can, build a better mousetrap than Google that had some advantages. And then why China? Sure, it could have been North America. Well, but again, my execution and skills and capability and relationships and capital sources all were in China. I lived in China before, so I was very fortunate to take that dream I had of trying to carve out a massive piece of what Baidu and Google were doing, i.e. the online travel space. And then luckily I could match that with, a strong set of relationships. And, I've founded other companies before in China as well. And so a little bit of experience and to really match that dream and vision with, strong execution capability.
You may be one of the very few China entrepreneurs who's going to do M&A and IPO.
Yeah, so I can't comment on any of that IPO stuff, but I think it's important to remember that M&A, IPO, on one hand, an IPO is just a source of financing, just like raising venture capital, angel money, and so an IPO within context is, well, is this a smart way for us to raise capital? Yes, it's sexy, and you know what, and kind of what I found out is the most sexy, choice may not be the best choice. If you're living in downtown Los Angeles and you drive a BMW, that's a sexy car, but that might not be the best choice because it's going to get vandalized clearly. So you probably don't want to do that. Now M&A, that's a different set of questions. That's something called, within the bucket of exit strategy. And we've talked about this on the other panel too, about, you know, how do companies, you know, should they IPO, should they sell, and all that sort of stuff. And I think it's just important to recognize that, you know, these things just don't happen. Like an M&A deal doesn't happen, an IPO doesn't happen. I mean, companies have a well thought out strategy. They've identified who could buy them, why could they buy them, what are they looking for, and then in a very organized, methodical process, they try to get to know all those decision makers over a long period of time. And very consistent with, you know, any other strategy. Just like a company has a sales strategy and they have a technology development strategy and they have a product pipeline and human resource strategy, you know, there's also something called an exit strategy that really, it's a very organized, it isn't something that you shoot from the hip at the last minute. And something that, you know, we thought about in every single company I was in. We always thought about, okay, once we build a great business, you know, well how are we going to get our money back? And I think there was a tweet, you know, which talked about, well, why not just not sell the business and make money on the dividends? That's great, and, you know, that's one fantastic way to do it as well. But an M&A or an IPO I think are two other great alternatives.
So how has the company changed since Baidu has taken a majority stake?
Oh, well, you know, these large, you know, Chinese organizations like Baidu, and the reason why, and luckily we could pick who we wanted to work with. And so you always want to be in a situation, I mean, you want to pick the woman you're going to marry, and you want to pick the company that's going to buy you. And, you know, we felt that, you know, Baidu offered the most strategic value on two levels. One was from a traffic acquisition point of view, just getting users, millions of customers, and Baidu being one of the most popular websites in China clearly provided us a lot of value. And then secondly, which was a little less known, is just the significant engineering and product integration between Qunar and Baidu, which led to all sorts of innovative and new and better products, which we couldn't have done on our own. And so those were two really, and of course, thirdly, a third reason was, you know, Baidu had significantly more financial resources than we did. And so having Baidu become a majority shareholder in our company really provided a lot of, again, resources, financial resources, human resources, product integration, and of course, marketing and user resources, which allowed us and continues to allow Qunar to, you know, maintain its leadership position in the online travel space.
So you're now living in Hong Kong. Was that a lifestyle reason or a business reason? And how are you finding the Hong Kong environment?
Yeah, well, I mean, it's cleaner, right? No,
it is cleaner,
no,
yeah.
No,
particularly over here by Cyberport.
Yeah, so I choose to marry my wife, who's from Hong Kong, happens to be from Hong Kong as well, and so for many reasons. One is, yes, Hong Kong is still at the doorstep to China. No, it's not in China, and there's a trade-off. I mean, for anyone who wants to exploit the Chinese opportunities, unless you're in the enterprise space, I think you really have to be in mainland China. Now, so I'm making a choice. I'm looking at other opportunities, and as an investor now, I've actually widened my net a little bit, and investing in places like Indonesia, which is another billion-dollar, or presents many billion-dollar opportunities, in the former Soviet Union, which presents equally large billion-dollar opportunities. In Hong Kong, I think it's a good place.
You said?
Former Soviet Union.
Former Soviet, oh my goodness. Indonesia?
Yeah, so, you know, any market that has over 100 million people is, I mean, to me, an exciting market to be looking at. You know, 7 million people, Hong Kong is great, nice startup community. You know, so like Ted and I were talking about this. We were thinking, yeah, when I was in Cleveland last year, it kind of felt the same. There was a lot of startups, and it was very interesting, right? And clearly Hong Kong is more competitive than Cleveland, because Cleveland's not at the doorstep of China. Cleveland's at the doorstep to Canada. So unfortunately, like, I think it's a little bit different. But yes, I do think, however, that and the reason why China gets its unfair share of venture capital, just like the U.S. gets its unfair share of venture capital, and really now Brazil a little bit, is because these are huge domestic markets. And historically, internet companies and technology companies have succeeded by focusing on one market. And after they scale, like YouTube and Facebook and all that, and then they expand into other markets. And so it seems historically it's been a smarter bet to focus on a large domestic market and leverage that into other markets. However, what we are seeing is, and this is an emerging trend, we're seeing multi-market opportunities, where we're seeing companies, like there's a great little company called iSango down in, based in Manila or Thailand, that was in 5 Southeast Asian markets, and they sold to Living Social for $80 million. And so what we're seeing is more and more, in Booking.com in the travel industry, they're in 30 markets, Skyscanner. So fortunately, we've seen a lot in the travel business. We've seen some in the games business, where multi-market opportunities, now may be the time for that, where access to capital is, luckily because of Bernanke, everyone has access to capital. Because of open source, technology is less of a secret sauce than it was before. Great translation services. And because of those multi-market opportunities that may be emerging, I think a place like Hong Kong is actually in a pole position. You have a much more multicultural environment. You have lots of business people within the business community in Hong Kong have done business not only in China, but they're equally comfortable going down to Malaysia and Indonesia and Thailand and even India. And so it could be that Hong Kong, we actually may see some interesting opportunities that are multi-market consumer plays that we didn't see before, on top of, as I mentioned before, great enterprise plays.
That's interesting, sort of like the same situation that Miami is for Latin America. Ted, you just opened AngelVest here in Hong Kong. Why did you do that, and what's your objective?
Well, why did I do that? Well, partly because I was based here. I co-founded the group when I was living in Shanghai 6 years ago. Because back then, of course, we noticed that in China, there was a real gap between literally the friends and family round and even the Series A, which got progressively larger as I lived there longer, right? Because a lot of the funds started raising $200 million, $300 million. They had to deploy 5, 10 million at a time. So what got you the few $100,000 round? You had to go to people that you didn't know, probably. The banks didn't lend to you. And we saw that there really was an opportunity to do that. And of course, when I moved down to Hong Kong about 18 months ago, I started noticing that there were quite a few, there were some entrepreneurs down here that were looking for funding. But it took me a long time to get my head around, is there enough activity down here to have a fully functioning angel group? The jury's still out on that, to be honest. We did have a successful first event where we just had people who could be angels. We had about 35 people show up. In fact, several people in the audience today. We're probably going to start off with a core group of 15 or so angels, and we'll start seeing maybe 1 or 2 deals a month. And once we have some more successes, then hopefully we'll continue to grow from there.
How do entrepreneurs tap into AngelVest?
We have a website, angelvestgroup.com, and you could actually submit your plans through there. It gets posted up. We have full-time staff. They're based in Shanghai, and they'll load the executive summary or business plan into our intranet, and then our members all take a look. We have about 80 members or so based here, Shanghai, and Beijing. There's a voting system that ends up selecting the top entrepreneurs, top plans based in each city each month, and that those top groups get to pitch to us in each city. So each month we'll probably see about 8 to 10 pitches. And then from there, the group, people break off into smaller due diligence groups. and then they'll present back to the larger group, hey, we want to invest in this deal because of X, Y, and Z. Who else is in? And we close the deal hopefully about 6 weeks later.
Sounds very structured, actually, for angel investing.
Yeah, we part of it's because we have a lot of, experienced VCs, people, successful entrepreneurs, and other people who have been part of other angel groups in primarily Silicon Valley, who moved out to Shanghai six years ago or so. And we collectively brainstormed and tested some methodologies, and actually through trial and error over the last 6 years came up with what we think is a reasonable system to keep us going for hopefully the next few decades.
Do you have regular meetings, and where do you meet here in Hong Kong?
Well, we had our first meeting over at California Vintage Wanchai. It's a slightly more secluded area, if you will, which gives us a little bit more space to meet and mingle. In the future, we'll probably have more of our social events in a place like that, but maybe some of our members are lawyers, and so they usually let us borrow their large conference rooms for the pitch.
I see.
Yeah, but in Shanghai, we found a great space in this bar. Actually, they just give us the entire section. We have our own room, and so it's very, very private. Everybody can hear the entrepreneur speaking, and of course, afterwards we mix and mingle.
In Beijing, don't you have meetings at the opposite house?
Yes, although I personally have never been to one of our Beijing meetings, but one of our other steering committee members is now living in Beijing and managing that for us.
Okay, who's that, by the way?
William Balbin.
Oh, William.
Yeah.
William was moved from Shanghai to Beijing.
That's right. He's pretty much based in Beijing now.
Yeah, and you've moved from Shanghai to Hong Kong now.
That's right. So we have, if you will, steering committee members all over the place. We feel that with Beijing, Shanghai, Hong Kong coverage, we have much of Greater China's entrepreneurial activity within our sphere of influence. We actually now have people who may join from Manila and Singapore and other places that are willing to fly in for meetings. So we'll probably have a lot of the Asian corridor covered.
That's interesting because that plays into the point that Fritz made about the multinational or regional play that could be important to Hong Kong's future. And for entrepreneurs who are here that can think more, think cross-border deals.
That's right.
Yeah. That's very interesting. Richard, you're pretty new at Iron Fire. You were at Microsoft in China before, in Beijing, right?
Correct.
And so now another transplant, another person who's moved to Hong Kong. How are you finding the startup scene here? Are there enough deals to go around?
Well, let me clarify a few things.
Okay, go ahead.
I've been doing angel investing since 2005 when I was working in Silicon Valley. And one thing leads to another. Then I have some groups I joined, the angel groups, and I also work with, while I was in Beijing, work on the Microsoft Accelerator program. So it's like an incubator. So I've seen the natural progression. And then about 6 months ago, I joined Iron Fire Capital. Iron Fire Capital started as a hedge fund. But the interesting that we found is even through the hedge fund researches, you found a lot of interesting insights in a specific industry. And then with the hedge fund, you can only buy public equities. But a lot of insights probably pointed you to say, hey, why you should invest in some early stage startup that could disrupt certain industry. So in a way for us, it makes sense, the hedge fund side and also the angel fund side. And for me, I spend about a third of my time in Beijing, a third of my time in Hong Kong, and a third of my time in the U.S.
In Silicon Valley or Seattle?
Seattle, Silicon Valley, and New York.
And New York. Okay. What's the most exciting place?
For me, I love food and wine. Hong Kong is definitely one of the best places.
Yeah.
San Francisco, awesome. Beijing, you can't beat the duck, but you can't have a lot of chicken and duck nowadays.
What about the startups?
Startups are great too, of course. I think the one
Which market is best?
I don't think there's any, you say best market, just
for startup to scale, every VC and angel wants to get a startup that's going to grow really fast, right? And get the exit really fast.
Well, let me share with you. Let me take a step back and share with you like why we do what we do and why we think this makes sense. Because like for a lot of angel investing, you're investing in people you know well. And for me, I grew up in Hong Kong. I mean, it's natural to me. And then I live in the States for almost 20 years. And for the past like 3 years, I was in Beijing. So naturally, those are where my connections are. And people are connected through the 6 degrees of separation. And then one thing leads to another. And we just like go to the different places and invest in the companies that we feel is great. So I don't think I have like a specific place I would say best. And I just like look at it like case by case. There are great deals we invest in Hong Kong. There are some great deals we invest like in New York and also in China as well.
So it's partly a comfort zone issue then.
You can say that.
Okay. I think you have the same issue in Silicon Valley. A lot of, they may say they are risk takers, but they feel most at home in the Bay Area, and they don't like to venture out that much, with few exceptions. Titus, I know you're really plugged into the startup scene here in Hong Kong, and you know so many interesting entrepreneurs. I mean, what are some of the examples of incredible startups that you see here in Hong Kong that could set this place on fire in terms of really a breakthrough?
Yeah, I guess just maybe taking a step back, I think on the Hong Kong perspective and where Hong Kong really sits, I do think everyone here has really a global view. So I know sometimes the discussion today has ranged, talking about should you focus on Hong Kong as a market or the global market. I mean, realistically, that's not even a discussion we have with entrepreneurs. Anybody that's targeting the local market, they're not going to raise, angel round funds, and certainly not VC funds. So I think the starting point really is it's a global business. And certainly from my perspective as an investor, I'm actually a global investor. So I've got investments in Hong Kong, I've got investments in the Bay Area, I've got investments in Austin, in New York, in the Philippines. So that means it's a little bit of a downer on the lifestyle because every day of this week I've got 6:30 a.m. conference calls with companies in the US. But I think that's really part of the beauty of Hong Kong is that, yes, it's a gateway to China, but I think as everyone has said, if you want a China-focused business, go to China, right? Hong Kong is really for global businesses. So I think that's really exciting. Now, in terms of trying to talk about which companies will be huge or not, I don't want to jinx any young emerging startups by saying they're going to be big yet. I think that's unfair. Realistically, it takes 10 years, right? So for our company, and like many angel investors, I started as an entrepreneur. So I was a co-founder of a company called PMA. We started it in 2002. We sold it in 2006 for $200 million US. And so like a lot of angel investors, that's where you get your initial seed capital, and then you get really sucked into it. And the thing that excites me the most about Hong Kong is the quality of the entrepreneurs that we're getting. And we're getting local entrepreneurs that are very hungry. We've got a number of entrepreneurs who have some connection to Hong Kong. It may be some kind of family connection that brings them back. And there's a number of entrepreneurs who literally had no relationship to Asia. They just came to Hong Kong for business. Because it's something that big companies have known for a long time. Hong Kong is a great place to do business. And so yes, we've got this emerging startup community, but it's something that global multinationals have figured out decades ago. This is a great place to build a global business. And I'm really excited about the entrepreneurs because at the end of the day, the core of a startup ecosystem has to be about the entrepreneurs. You can have angel investors, you can have mentors, you can have government grants, but all of that is icing on the cake. It's the entrepreneurs that bake the cake.
Okay, so what are the ingredients of the local entrepreneur then?
I think so for me, one of the things that I focus on is something that I call founder market fit. And so what do I mean by that? We're invested in an online jewelry business called Plukka. So the team is...
I think they're here, by the way.
They might even be here.
Yeah.
So it's a fantastic business that combines, and I think also plays to a lot of Hong Kong's strengths, which is it's not about necessarily the website. although the website is an important component. It's about having the jewelry industry expertise. It's about having the marketing and sales expertise. And as the business has evolved, it's actually evolved to an online plus offline model. And that's been pretty topical recently because some of the more famous US startups like Warby Parker have gotten a lot of news recently about combining online plus offline. Well, Plukka is also doing that in, I think, a very innovative way and is seeing a lot of success. So they know a lot about jewelry. And let me go to the opposite extreme. There's a company in San Francisco that I'm invested in called NanoSatisfy. They make nano satellites. So these are 10 by 10 by 10 centimeter cubes that have been going into space for 10 years, but it's been universities sending them into space. This is the first company that's going to commercialize it and turn it into a business. The team is actually visiting Hong Kong later this month, and they're going to meet with the Science Park. They're meeting with a number of universities, etc. And so anyone that's interested in satellites in space, feel free to talk to me afterwards. Both teams are great in their respective industries, but imagine if they swap places. If you had the satellite people trying to sell jewelry online and the jewelry people trying to send satellites into space, that would be a disaster, right? And so it's not enough just to be a good founding team. I think you really have to have a strong fit with that market. I've met with actually several teams this week where it was very experienced, in my view, institutional people, and they were focused on more of a younger social networking business. And I struggled with that. I thought that, first of all, targeting the 18 to 25-year-old crowd, that's already a challenge. But secondly, if you've got all these awesome business relationships, I would have loved to have seen the business be, a B2B play rather than a B2C play.
Well, how do you find your deals? Do the entrepreneurs just knock on your door and they're there, or you have to go out and actively find these good deals?
Yeah, so I guess in Hong Kong, it's a pretty tight community. So as long as you go out and show your face, it's when you're writing checks, it's easy to make friends. And so that's not the hard part. And I guess the other really interesting development globally has been this platform called AngelList. And so it's this thing that you wouldn't expect to work. It's finding entrepreneurs on the internet. I mean, you probably couldn't think of a crazier idea, and it works. So a number of deals that I've done have been sourced through AngelList. Now, of course, I've met the entrepreneurs in person, and in every single case, I've actually had my expectations dramatically exceeded in person. They were just much better than I thought. So getting deal flow is not the hard part. The hard part is really prioritizing time and resources.
What's more important for everyone on the panel, the entrepreneur or the business model? If you had to choose.
Absolutely the entrepreneur.
Yeah, I would say the same because, of course, business models quickly change as the markets change around you, and the good entrepreneurs can pivot quickly. Otherwise, you'll lose all your money.
And the other thing I want to add on to that is as angel investing, you expect that business might fail. It's probably 90% plus will fail. But it's important to invest in the right people. And if they fail the first venture, you might want to invest in them in the second one and the third one, because this person will one day be successful.
Yeah, the entrepreneur, anyone who's focused, driven, some experience, flexible, all those great things about people, but hopefully still a little bit pig-headed, because people who listen to the investors too much probably don't succeed as well.
You've done a couple of startups, all in different spaces, right?
Yeah, that's right.
And what were those spaces? Besides Travel Search?
I co-founded a sports website, like a Web 1.0 sports website, which was China's largest sports internet company, and a music website that I was very fortunate. The VC, it's funny, the VC wanted to buy it from me 100% because he thought he could run it better. So it's really great when a VC thinks they can run a business. You just want to sell it immediately to them.
And what happened, actually?
It isn't here anymore.
Okay. All right. We'll draw our own conclusions then. Fritz, you were going to say something.
I was just going to answer the last question. Definitely for me, also people. It's not even close. For early stage investment, where business models can change in a week, you really want to back the people. And I think it's great that we have business plan competitions, but I was a mentor at one of the business plan competitions, and what happened was between the week they submitted the business plan and the pitch, things changed. And so the judges were a little bit surprised. They asked the team, what happened? How come the pitch is a little bit different from the business plan? And the reality is, 1 week passed. And that to me is a good sign. That's the sign that the entrepreneurs are taking feedback and they're iterating. And I think that's really important.
What was the biggest surprise for you as an angel investor? I mean, this is a whole new profession for you. Are there surprises?
Well, yes and no. I was very fortunate that my first investor in my last company in 2005 had suggested that maybe I should invest in a couple companies and be on the board just because it would make me a better CEO, because I would understand what an investor and a board member was thinking about. And so I actually did that. And I started doing it more and more and more. And next thing you know, I've been investing a lot, even while I was the CEO of Qunar, and then my co-founder did the same thing, and it turned out that it was quite successful, and then so I feel like on that side there was no surprises. Probably for me personally, the biggest surprise is so we talked about it's all about the entrepreneur. That's great. Now, if someone can just tell me, so how do you, determine who's a good entrepreneur? I mean, it'd be great. And so I think I've made a couple mistakes over the last year in, gauging who really is a good entrepreneur and who isn't. And, that's been, very challenging, and I'm going through just a systematic process. And so it's something that was a surprise to me because, after you have a successful startup, well, I guess I can do anything. I can make movies, invest in real estate, and be an angel investor. And then, you find out that, well, maybe it's a bit more complicated than that.
Okay, that's interesting. I think one of the raps about angel investors is that I hear laughter over there. One of the raps about angel investors is that, well, I'm not going to accuse anyone on this panel of this, but they call it sometimes stupid money. How do you respond to that?
Well, yeah, I actually have some doctor friends in the U.S. who are part of angel groups. So, and they'll be the first to admit they don't add any value. But I guess startups that are desperate end up coming to them and they raise money and they get to buy some more time. I will say that when you look at the angel world, there are many, many different types of angels. You have folks that are very, very experienced who can actually guide the entrepreneurs through the rough times and so forth. You have angels who could actually introduce that entrepreneur to people in the industry that they're in. If you're a corporate executive like myself, anybody in the online video space, for instance, even now they're constantly calling me saying, "Oh, can you introduce me to the executives at XYZ company?" And so that could actually make or break their company. So if you can add significant value, I don't think that's necessarily dumb money. It actually improves the odds of success. But, the jury's still out about the returns of angel investing, of course. You see many different types of studies. They're all very inconclusive. You would hope that the returns are higher than the next level up, which is the VCs, but it's hard to say because you have so many different types of angel investors out there. But still, I think that it really depends on the person.
So I want to add on to Ted's point. I think nowadays, angels, at least from the people that I talk to, the angels I would work with, they're becoming more and more hands-on. I think the way that people look at it, it's angels are no longer just putting in capital, but also helping the entrepreneurs be successful. Almost like the Sherpa, helping them to climb the mountain, carry the bags. And to us, we found that that's really resonating with the entrepreneurs that we invest in. because like we're helping them with design, we're helping them with like research, and also helping with like all those like chores like accounting and legals. So we at least like that's our approach. We found that like from our perspective, we need to do more value added to help the entrepreneur be successful, to prevent ourselves being in the stupid money they say.
I guess if there is someone who's saying there's stupid money, I guess they're also implying that there's also smart money out there, and I guess they're implying that they have a choice, and they're thinking, should I take stupid money or smart money, right? Well, you know, I think having a choice in fundraising is like a luxury. Yeah, I remember, you know, Nicholas Zenstrom from Skype. He had a choice. He had like 8 term sheets to invest in Skype. And that's great, and that's a luxury. But at the end of the day, I mean, even experienced entrepreneurs, and I'll be the first to admit it, you know, I mean, you've had some successes before, and, you know, these investors still go through the same detailed process. So on one hand, it's really a luxury to have that choice. And if you don't have a choice, well, you know, maybe that stupid money is also possibly low maintenance money as well, because they're not going to ask as many questions, or the questions they ask you are probably really easy to answer. But what I would add, though, is, I mean, and I think all of us would agree on this, is, you know, I mean, we have to, I mean, if anyone is going to invest in us and they're going to give us some of their money, this is money they earned. And on one hand, we have to really respect that. And I would be very concerned if an entrepreneur didn't respect someone who was actually providing money to them. I mean, to me, that's not the type of entrepreneur I would want to be affiliated with. You know, that's for sure. And it's kind of a test, because, you know, as an entrepreneur, as a CEO, we're faced with choices every single day where we could make a decision that helps ourselves, that helps our partners, or that helps our investors. And if someone gives you money, I mean, hopefully at the top of the pyramid, you know, like your investors are the ones who have the highest priority. And time again, which is why China gets a bad rap, is that, you know, those decisions weren't made on behalf of the investors. They were made for some other reason. And it may not be for the entrepreneur's personal benefit, but it was made for a reason that clearly wasn't good on behalf of the investors. And so, you know, stupid, smart, yes, you know, we can laugh about it, but hopefully every entrepreneur, you know, can really have the highest respect for those capital providers.
Yeah, I think if you don't know what you're doing, angel investing is a really good way to lose a lot of money quickly, right? So it's something that's something you probably want to have a little bit of experience, maybe do a little bit of your own research on. And I've looked at all the largest studies, partly for my own benefit, you know, as I was getting into it. I've seen all the data. And one interesting point worth remembering is that one of the critical factors is how much due diligence you do on average. So people that do, on average, less than 20 hours of due diligence per deal, all right, make basically their money back if they're lucky, which means, you know, at least half the people are doing a lot worse. People that do 20 hours or more of due diligence average 5x on their investments. So you can decide which category you'd rather be in. Coincidentally, and another shout out to our local ecosystem, General Assembly holds classes about various topics, and I will be teaching a class on angel investing sometime in May. So for people that really want to do it themselves, feel free to do that. I would also say that if you actually are trying to make money out of angel investing, you may definitely look at investing in a fund, right? Instead of trying to do 2 deals a year yourself with the time commitment that you need to first source the deals, find somebody who's got a fund structure and somebody that you're comfortable with, and then you can get the best of both worlds. You can actually have a high return and feel good about being an angel investor.
That sounds like something you're thinking about pretty seriously. Although I know you're angel investing on your own.
No, I've got a fund structure, so I've got
Okay.
investors in my. I mean, so you know, some of the people that have invested with me have exactly that view, because they know I've got my own money in the fund, and so I'm making decisions pretty carefully.
There's a number of accelerators and incubators here in Hong Kong. Are these places a good place to source deals? Do you find good entrepreneurs coming out of out of these incubators and accelerators. There's a whole host of them here in Hong Kong. And I think several of them are represented here tonight. Are they a good sourcing ground?
Well, certainly I have some relationships with people who run some of these incubators as well, and we're going to talk about how we could see some of their deals. Maybe they'll just pick a few of the ones that they think are promising and submit to us each month. So absolutely, we're open to it. Of course, it depends on the value add that incubator provides as well, right? If it's just literally, here's a desk, go do whatever you want with it, that's not really value add. But if it's a team of people that run the incubator and they're providing good advice, they're even putting some money in themselves, and then when they're ready, they submit to a larger group, that's what we're more interested in.
Yeah, I guess it's part of the ecosystem, like the incubators, and or you can even go all the way down to someone's startup cafes. We work with like all of them, because I don't think we should discriminate one or the other. At the end of the day, for us, it's we work with say Rocket Space in San Francisco. We work with Innovation Works in China. I mean, the collective insights you get from everybody, it's what helps us grow as well, what helps us learn as well. And specifically in Hong Kong, InnoAsia last October, we actually invested in a deal through InnoAsia. We're very grateful. It was really exciting for us.
Yeah, I mean, the short answer is yes, they are very valuable. So certainly things that the government has done, like Cyberport and the Science Park, are extremely valuable. I've got 3 companies that I've invested in the Science Park, so that speaks for itself. Having said that, I think one of the beauties of Hong Kong is we've also got great private sector initiatives, right? So Accelerator HK, Startup Bootcamp. We've got a number of co-working spaces. I think co-working space is increased by something ridiculous, like a factor of 100 or 1,000x. It's off the charts. So we've got all these private organizations. We've got mentoring organizations like TIE, the AAMA in Hong Kong, and I think it's this ecosystem that we're building up. We've got Startups HK, which has just been around for a long time and is a core member of the ecosystem. And you've got all these different players that are all helping in their own way. And it's a combination of, yes, of course, we have some help from the government, but just as importantly, and perhaps even more importantly, to build a sustainable ecosystem, we've got the private sector coming in and building it up as well.
Well, okay, yeah. Let's open it up to audience Q&A. Yes, here in the front row.
Hi there. First of all, a shout out. This has been a fantastic event. I've learned an awful lot. My name is Robert May. I'm here from the San Francisco Bay Area and don't know Hong Kong very well, so you've really educated me. I appreciate it. I'm a serial investor, an angel investor, and entrepreneur, so I've seen both sides. I've got a specific question, though, about funding structures here in Hong Kong. So the previous panel talked about the issues around excessive valuation in early stages that leads to a difficulty in raising an A or a B round. Is convertible debt used here in angel funding scenarios? And if so, can you give us a sense of the range of warrant coverage and perhaps coupons?
All right, I'll start off with that question. I mean, at the end of the day, I think a lot of times people focus on preferred equity deals versus convertible notes. And the reality is, and I've invested in both in multiple geographies, a badly structured preferred equity deal or a badly structured convertible note deal, they're both bad. If you have a good structure in a preferred equity deal or a good structure in a convertible note deal, that's fine. So at the end of the day, I don't think it's whether you have a preferred equity or convertible note deal. At the end of the day, it's just about the specifics of that structure. And I've seen, both good and bad deals all over the world, including Hong Kong. So I don't think that's unique to Hong Kong. What I would say, though, is in terms of the maturity of the startup ecosystem, I think it's clear that the Bay Area, things are a little bit more standardized. And so there's a lot of things that just move quickly. In Hong Kong, you should expect the deal discussions to be a little bit longer, perhaps a little bit more back and forth about educating various people. that's all part of the growing pains of being a young ecosystem. So, you know, I think, yes, there are still things that everyone here needs to learn, but the beauty of the internet, of course, is that there's a lot more transparency about what's going on globally, and so I think that the best practices are moving over here quickly.
And to add to that point, I think just like what you see in like Y Combinator, convertible deals are definitely more like it's quicker, it's cheaper, and that's what a lot of people opt for. I think this is like a trend that you cannot ignore.
I spotted a question over here. Oh, just wait for the mic and identify yourself, please.
Thank you. My name is Philip Leung. I'm president of the local AAMA chapter. I have a question about angel investing locally, and I guess it's more aimed at Titus and Fritz, because you've been investing locally here for a longer period than Ted and Richard, because you guys just moved here to Hong Kong. The question is, when you invest angel money, what are the hot areas locally that now seem to offer huge profit potential? Are they in social networking, the cloud computing? Are they in mobile? Are they in retail? So what are these areas that might produce more promising returns, if you will, and what are the key success factors that you're looking for in the company that you invest in?
So, yeah, each one of you, why don't you name one category? Because it's such a big question. Why don't you name one category and why?
Recently, I've been looking a lot more at the mobile space, just because, of course, you know, Asia with massive penetrations of smartphones, but also now with the Xiaomis and so forth, the cheap smartphones, I think it has tremendous potential. Now, of course, mobile is still a massive space, so you have to kind of pick within it, too, what you're going to focus on. Recently, I did a deal in social casino gaming. There was a team from Zynga that quit and the stock dropped, so I knew that they were onto something. And you know, lo and behold, I met the team, and I thought it was a tremendous deal. And they were very, very pro-investor, the way they structured the deal. And so I said, all right, let's do it.
Well, for me, it's like I like to invest in things I understand better. So by training, I worked on mobile, big data, and cloud computing. Those are the areas that I like to invest in, especially in the cross-section of like where like mobile utilizing like the big data or the cloud platform. We invested in deals like in the US, like there's a deal called Stream. It's like a Dropbox for video, and they have like a technology that can do like 16 times quicker in transcoding. Those are the things we found it very fascinating from a technology base, and we know that cloud computing, big data, all those areas are going to grow, and of course like mobile. How can you utilize like the cross section between like those big trends? And those are innovation that will come out from.
For companies in Hong Kong, I'm excited about some of the fintech areas, and by the way, like a great investor knows how to copy other people. And I was talking to Melissa earlier today, and she told me about her great fintech investments. So I'm copying her, but I think this market is very unique. There's a deep talent pool of financial service professionals, very global. In order to work for these institutions, you have to be very aggressive and smart, intelligent. Sounds like this could be a nice little cluster in Hong Kong, and you know, it's something that I would continue to look at very aggressively.
Yeah, so I guess going back to the point about investing in people first, I really don't look at sectors per se. And so on the people front, you know, like many other investors, I invest in men as entrepreneurs. But unlike some other investors, I also like to invest in women. I like female entrepreneurs. I think, you know, women spend a lot of money, and even on the business side, women make very important decisions, and women entrepreneurs are fantastic. And even more extreme, I like to invest in women who have had children, because I've got 2 young children, and I can't think of any better training to run a startup than dealing with young children. That's just chaos. So, you know, that's where I may be a little bit contrarian. I actually like to back female entrepreneurs and have done it multiple times here in Hong Kong and all over the world.
Okay, great news for all the female entrepreneurs out there. I think there's only one thing standing between us and drinks and dinner. If there's only one last question, and then we'll hightail it over to the buffet. Anyone dare to ask a question and go up against the food element of this event? I guess not. All right. Well, let's give our panelists a very warm round of applause, and thank you all for staying here tonight. Thank you for your attention. If you like this program, please join us in Beijing for May 29, and Shanghai is September 12. And Silicon Valley is October 3rd, and we're going to do India soon as well. So thanks again, and please join the Silicon Dragon Club, the Growing Club, and if you want to leave your business card, you can. That would be a help for us staying in touch in the future. But thank you again, and let's have some drinks to celebrate and dinner. Thanks again.